Price is still interacting with the same structural memory. It has not left the range defined since February. Movement appears active, but structure has not relocated. The weekly chart shows this clearly. Since February, price has remained inside the same primary boundary. That boundary is defined by the first weekly candle of February. Every movement since then has occurred inside that range. This is not expansion. This is containment. Now focus on the 0.33 level. This level has acted as a structural pivot, not because it is a number, but because it aligns with the symmetry low of the weekly structure. Since February, price has repeatedly returned to this area. Each return matters, because repeated interaction increases structural weight. This is time. Time is not measured by candles alone. It is measured by how often price returns to the same location. And here, the same location keeps being tested. Now look at how price behaves around that level. It moves above, then returns, moves below, then returns again. This is not direction. This is rotation, and rotation defines compression. Now consider volatility. The 20 Bollinger Bands on the weekly chart are not expanding upward. The upper band continues to slope downward. That means upward movement lacks persistence. At the same time, the lower band is flattening. This is important, because flattening lower bands indicate reduced downside acceleration. So what does this create? A narrowing environment. Not a breakout condition, not a collapse condition, a compression condition. Now position must be understood. Price is not above the structure. It is not below it. It is inside it, inside the February weekly range, and more specifically, inside the March first week range. This reduces usable distance, because every move encounters structure quickly. Now interaction becomes dominant. Price is not moving freely. It is constantly interacting with boundaries. Each interaction reduces continuation strength, because continuation requires space, and space is limited. Now pressure. The 20 moving average continues to move downward relative to the longer structure. The 120 moving average is flattening. This combination matters, because flattening long-term structure reduces directional strength, while the shorter-term structure attempts to push downward. This creates conflict, and conflict produces rotation. Now, RSI reflects this condition. It remains near the 30 level, but does not collapse further. This is not strong bearish continuation. This is sustained pressure without release. So what is the environment? It is not trend. It is not reversal. It is compression around a structural pivot. And until that pivot resolves, movement will continue to recycle inside this range. Now shift to the monthly structure, because the weekly behavior exists inside the monthly context. The March monthly candle is still forming. It has not closed. And that matters, because structure is only confirmed at close. Right now, the March candle is inside the February candle. This is containment, not expansion. Even though the candle body appears bullish, it is still within the prior bearish range. That means the structure has not changed. Now look at the wick. The upper wick is long. This is critical, because it shows failure to hold higher prices. Price moved up, but did not persist. This is rejection. Now consider the trend line. Price moved above the prior downward trend line, but did not accelerate away from it. Instead, it moved sideways. This is not breakout behavior. This is transition behavior. Now volatility on the monthly chart. The Bollinger Bands are slightly expanding, but the expansion is uneven. The lower band is moving more aggressively than the upper band. This indicates the downward pressure still dominates, even if price is temporarily stabilizing. Now position. price is still below key historical structure and still within the February range. This confirms lack of relocation. Now, interaction. Price continues to interact with the same levels: monthly levels, weekly levels, session levels, all overlapping. This increases density, and density reduces clarity. Now, pressure. The 20 moving average is slightly downward, not sharply, but enough to indicate that upward continuation lacks strength. Now, RSI. It is near 40, not oversold, not strong. This is neutral pressure. Now, combine this with the weekly. Weekly shows compression at 0.33. Monthly shows containment inside February. Both align. This is not expansion. This is structural pause. Now, what does this mean for execution? When higher timeframe compression exists, lower timeframe signals lose reliability because they operate inside containment. This is why movement appears active, but fails to extend. Now, the key condition. If the monthly candle closes outside the February range, structure shifts. If it closes inside, compression continues. Until then, movement remains conditional. Now move to the daily chart, because this is where behavior becomes visible. Daily candles remain inside the range of the first March daily candle. This is critical, because it confirms that even lower timeframe movement has not escaped structure. Now look at position. Price continues to move around the 20 moving average. Above, below, above again. This is not trend positioning. This is equilibrium. When price stays near the moving average, it is not choosing direction. It is negotiating. Now, volatility. The Bollinger bands are flat, slightly upward, but not expanding. This indicates lack of sustained momentum. Now, interaction. Daily candles repeatedly test the same boundaries. Upper range, lower range, return to center. This repetition defines compression. Now, pressure. The slope of the moving average is slightly positive, but weak, not enough to create continuation. Now, RSI. It remains near 40. This is consistent with the weekly and monthly. Not oversold, not strong. Neutral pressure across all time frames. Now bring all three together. Monthly shows containment. Weekly shows compression around 0.33. Daily shows rotation around the moving average. This is full alignment. Across all 5 axes. Time shows repeated return to the same structure. Volatility shows compression without expansion. Position remains inside prior boundaries. Interaction increases at the same levels. Pressure weakens across timeframes. This defines the environment. Now execution becomes clear. When price is inside compression, distance is limited. So behavior must change. Instead of expecting continuation, focus shifts to boundary interaction. If price reaches the upper boundary and fails to hold, it returns. If it reaches the lower boundary and fails to break, it returns again. Only when price holds outside the boundary does distance become available. Until then, movement remains rotational, not directional, not trending, processing, inside the same structure.